Hello, my name is Jason Huval. I'm the broker for Central Metro Realty, and I actually wear two hats. I'm also the broker for Stone Oak Property Management. And so I'm going to talk about this report today in two different lights, I guess, from the viewpoint of sales and then as a landlord, wearing the hat of a property manager. And so the two sections I'm going to talk about in sales, I'm going to talk about active listings and then what's closed. This is for the Austin area only. I know we do cover most of the state, but I do today, because we're based out of Austin, I'm just going to talk about the Austin metro area. And so, which is quite large. But for the sake of these numbers, I'm just going to talk about Austin. So let's dive in. We'll talk about active listings. This is about the same as we had last month, right around 10,000. And this little asterisk that's right here is I'm missing today's date in October. So one day I don't think it's going to be huge. It'll probably bring it closer to where it was. But I didn't, for the sake of me getting this report out, I was excited to get this information. We get a lot of questions from agents and from our landlords. What's the market doing? Here it is. And so doesn't look too different on the active side as it did last month. So, our inventory is still growing, but houses are still selling. So let's look at on the sales side. What has that done to us? You can see here in October, 1,754. Again, that doesn't include today's closings. It's a Monday, which is typically a big close day. Fridays are kind of your Thursdays and Fridays are your big close days. But I still am missing this information. I don't anticipate it being too much higher than even with a 10% increase. This shows clearly there is a pretty significant decline in sales. I know some of this is to do with inflation, some to do with just uncertainty and fears, and we've got a war that's going on. There's a lot of things that can really deter people from wanting to make a major purchase. A house or a couch even. But in this case, it does affect us. It's 1,754 homes is a significant decline if we look at let's put some math to it. Pull the calculator here from our 2019 numbers, 1,754, and 2019 was 2,907, 60%. That's a big decline. I'm not saying that, or this report doesn't indicate like this is where everything's headed. This is just showing where it is, what happened in October. There may be completely different results. We really, as a company, we're kind of sitting on our hands to see what happens, or curious to see what happens in March and April. This is coupled with all these other factors. You also have a downturn in what is a normal downturn, like a normal slow time. October, November, December, all the way up through until March, usually whenever the kids are getting out of school, you have the slower times for real estate sales. So I just wanted to show this report. This is a significant decrease, rather. This almost exactly what's happening at my brokerage. Like spot on. We've seen this fall off or this slowdown, and so I just wanted to show this numerically. Let's look at leasing. Leasing, again, same area. This is the Austin Round Rock MSA. We're going to look at active is what I find interesting. You can see here, there was our September info. We went over that. Our October info, again, no crazy spikes in inventory. I think you're going to see this number grow as the homes for sale aren't selling. I think we're going to see a bigger number. This isn't anything too crazy, right? It is an increase, but it's nothing that, to me, that I'm like, floored. Let's look at it as an actual number. So we'll take 2020. That's the oldest data that I have here. 2020 from now. Use our little calculator again here. Over, what was it? 2583. 1.3. So 1.3 times the amount of properties, which is nothing crazy to me. 30 or so percent increase. That is, it's a big number, don't get me wrong, but it's not anything, again, it should reflect some of these homes that aren't selling. And I imagine you're going to see more of that pull away. What's really interesting here is to see these close. So these are leases that are signed. These properties are off the market. They're consistent. So we have the same, this looks really good. Very, very little variation here although there is an increase in inventory, and that's coming, and you're going to see more of that. I know at the summertime we were running in the teens, I think, for days on the market, 12 to 15 days, somewhere in there, I think, for active days. Currently, I think we're in the 20s to lease a home. I would anticipate it's going to take longer to lease a home, especially through the slower season, through the winter months. But as a landlord, I would prepare for that. That it's probably going to take a little bit longer to lease my home. You're definitely going to want to check competition whenever you lease it the day of, right before I go on the market. I want to look at everything else that's out there. Maybe you do have a nicer kitchen. Maybe you do have a better backyard. But if you've got three other homes in the area, two other homes in the area that are significantly lower priced than you, they're going to go and lease those homes first. People vote with their dollars. But that just means there's going to be more choice for tenants, which is good news for tenants, bad news for landlords. The same thing on the sales front. So, like I said, there probably will be some conversion of these sales. Those 10,000 homes for sale are probably going to come in as leases. It's something too, as a landlord, or if you're considering leasing your home, you may consider, if the market's kind of stale on sales, maybe you see a decrease. In order to sell your property, maybe $40,000 or something. You have to write a check because of you're upside down on it. It may be better for you to lease it. You have a couple hundred, maybe it costs you money. Well, I'm not going to lose money on a lease. Well, let's say if you had to write a check to sell it at $40,000, but it costs you $200 a month after management and everything else to actually lease it. You're not making money, you're losing money. But you had to do it for 3 years or 2 years or whenever the market comes back. Let's say 3 years, for example, at $200 a month over 12 months, that's $2,400. In 3 years, that's just what is that, $7,200 versus paying $40,000 or whatever the loss is today. So I think you're going to see more people do that math and put more homes come on the market for lease. Now you can see the lease demand isn't really spiking. So I think that's going to drive days on the market for lease homes to go up as well, even though we're not there yet. But anyways, that's my 2 cents on these numbers. If you'd like this information, if you want a copy of this information, or you just want property management services or sales, we'd love to help you out. We have an amazing team. Thank you so much for watching. I hope this helps. Feel free to call us or email anytime. Again, my name is Jason Huval. I'm the broker for Central Metro Realty and Stone Oak Property Management. Thanks so much.